Good afternoon, everybody. This is Chrissy from Solstice, ATR, and Vulcan Capital Research. Hope everybody's doing great. You can find us on the website at Solstice ATR, or my handle on Twitter is Chrissy Farah. On Discord is Zuzu Farah. So this is the handle on Discord. Make sure you can subscribe. It's for free. And hit the like button and put your commentary in there. All right, let's first start by taking a look at the VXX. And here I am showing the VXX in the stock market. Basically, it's giving us a higher low from the prior high, and this is a lower low on a linear regression channel on a weekly chart, telling us, hey, is there going to be more side action on the VIX? For the last 4 weeks, the VIX has been, side action a little bit. It was an engulfing on the last week that we had. Do we continue lower or do we end up reversing? Here's a couple of scenarios I want to say. We are setting up on some of the technicals and the stocks in the market to trend higher. Is it possible before the election and the stimulus package that by December we'll have an outlook much better in the global markets and domestic markets? So we're going to trade what the charts gives us. Don't trade being biased to one side. Technicals are set up for us to help us in the long term. If you don't use technicals, make sure you use a channel, some kind of a retracement of a Fibonacci to understand the levels. This is a Fib, basically showing you the high and the low in the last couple of months. This is the 38%, 50, and 61. So basically trade the levels more importantly than what you think. Let's take a look at the SPX, the combo of the NDX, which is the NASDAQ 100, the Russell, the RUT 2000, and the $DJI, the Dow, of the 30 companies in the US. Let's take a look at them on the weekly. As you can see on the weekly, we have recovered quite a bit on the weekly chart, but most of the run came out of the Russell 2000 and a little bit of the S&P. Let me go to the daily chart to show you how it looks like and why we came out of that range. As we can see, the wedge, we came out of a wedge in a down channel. We eventually found the bottom. We leveled off from June 8th. This was the June 8th, June 3rd reset, came back, retested it, fell back down, and eventually we broke up. And last month, in September, we came back a little lower. Then eventually we grinded back up in October, back to the highs, and cleared the June 8th high. Do we continue or do we come back in the combination of those instruments? Let's take a look at the RTY on the 4-hour. What I'm going to do, go to a daily. We're going to change the time frame from daily to intraday. Instead of 1 day, we're going to look at a 30-day range. What we're going to do, go to a 4-hour chart so we can keep us in line on most of the instruments. And this is kind of giving us, the last 5-day range before we broke out from the prior last week's, combo on those instruments. Let's take a look now at the RTY/RTY. This is the E-mini contract, small cap. As you can see from last week, I embedded a small fib from this area all the way to the high. So my anchoring is the 50 Fibonacci fib, the 38 and the 18 SMA. As long as we're above the 61.8, I would like not to see the Russell go below the 1595 or the 1600 in order to continue higher. That's on small cap. You can look at the IWM. That will keep you in line of the RTY. Let's take a look at the NASDAQ/NQ and be QQQ. That way you can look at it, or the tech sector, which is I believe in the tech. You can look at the ETF for the fund, and that is just blanked out. I believe it's SGM. I think that's the mid cap. I think that's the mid cap, but I'll look at it at the end and I'll show you what it is. This is the 5-day range. This is the 5-day range. I anchored the bottom to the high. If we're going to continue, we do not want to see the 11,600, broken down, or the 480. Okay, so that's on the NASDAQ. Let's take a look at the Dow Jones Industrial Average. The Dow Jones Industrial Average, as you can see, this is the last 5-day range. This is the last week's Friday. This is the weekly, from the low to high. What I can do is basically look at it a little bit more in detail. We'll just move this one out of the way so we can get the Fibonacci. And I'll anchor that one for you so you can see what I'm doing. You grab the bottom here to the recent high here. You anchor it. You extend it to the right, edit the properties. When we're editing the properties, what we want to do is go back 2 days back so we can see where Sunday is and the prior breakout. This was Sunday. This was last week's high. We eventually broke out, came back on Wednesday because of the tweet was Trump on the stimulus package. He was only going to sign for $1.8 trillion instead of 2.6. And, Pelosi saying no. He said no, we don't negotiate. And this was the drop. We recovered on Wednesday, Thursday, and Friday. We continued higher. So that's the Dow Jones Industrial Average. Let's take a look at ES, which is E-mini contract for the SPX 500. I did a similar thing. I anchored it down to here. We do not want to see the 34, 38, or 34, 22 reset from the prior week. I mean, this week, which was the tweet, we broke above it, and he's basically the prior high from the prior week, 33.88. So trade what you see on the charts, not what you think. Let's take a look at GC, and I'll look at BTC and gold. This is GC for gold. See, you can look at the GLD, SPX, or E-mini. You can look at the SPY. The QQQ, you can look at the NQ. So this one for GC or GLD, as we can see, we recovered, the last 3 days quite well. Do we clear these 3 candles that were engulfing to continue higher in gold or not? Let's take a look at BTC. That's the Bitcoin futures. As you can see, in the last 3 weeks, for 2 weeks range, we fell down, came back, side action. We need to stay above the 11.8 to continue higher. This is the down channel that we are in, a symmetrical triangle. If this range we can break out, this is, the Friday's range. This is the Sunday. We can take this week's range, which is this low here, anchor it to this high. Let's just look at it that way. And what I'm going to do is basically, when I anchor it, I'm going to go a little further than 2 weeks range so we can see the levels a little bit more. Edit properties. Instead of going to 10.6, we'll go like to probably 9.20 or 9.15, so we can see a little bit more the range. As you can see, we have basically cleared the prior 3-week range, trying to continue higher. If Bitcoin going to continue higher, we don't lose the 10,885, and we can continue higher. We can see the prior highs and that engulfing candle that took us down, and these 2 down here. So what I'll do, I'll go back in range for 5 days, edit properties, and you'll just go back and put like here 10.04. And that should anchor us for just 2 weeks range instead of so many days out there. That should be good. There we go. We can see the 5-day range in BTC. Let's take a look at CL. This is the crude oil. You can use the USO in crude oil. We had created side action. We went up, we consolidated, we eventually fell down, came back. If this is considered a head and shoulder, we don't lose, the 39.50 area. We can continue higher in crude and try to break the prior highs in this area, those 2, in order to get back to the 43 range, which was the prior consolidation from a month ago, a month and a half ago. That's in crude. Remember, transportation is $DJT. We're going to keep, oops, $DJT. As we can see in the DJT, we recovered quite a bit of ground and we continued a little bit more higher on DJT as long as we do not lose the prior annual high. And what I can do is anchor this week's low from Monday. This was the low on Monday on the gap. You connect this dot to this dot, and basically we have a better range to keep an eye on transportation. As long as we're above the 1177 and 1165 650, we can continue higher. What I'm going to do is go over a couple of stocks that are setting up. I'm going to look at AAPL. I have anchored the fibs here. You can see them trying to look for the 119.50 area. As long as we don't fall below the 115.80, we can continue higher. That's Apple. Let's take a look at Amazon. Amazon is in a similar situation, trying to break out of this prior high. We've broke out of the last week's range. We consolidated, looking to continue high. And you remember Amazon Prime is on this weekend. Let's take a look at AMD. AMD trying to negotiate for buying another company, and basically AMD fell a little bit down on Friday. Let's take a look at FB. FB is range bound. Let's take a look at GOOGL. GOOGL is trying to break out. Looks like it's in the consolidation on the week before and eventually trying to come back higher. If we can continue, we'd like to see, Google in the 1560 to 1580. If it doesn't and it falls back below the 1475, be careful of Google. Let's take a look at Netflix, NFLX. As you can see in NFLX, it finally, broke back up. And continuation, if it's going to continue, this is the prior high on the 20-day range. We can continue a little bit more higher in Netflix. Let's take a look at Tesla. Tesla is range bound, hasn't been able to get out of the 2-week range. Let's see what it does. And what I'm going to do here is go over a couple of ETFs or a couple of mutual funds in the mid-cap SGM. Come on. Stonegate Mortgage Corp. Come on. This doesn't want to show me it. Looks like it's consolidated. I had this problem earlier on it, so that's okay. Let's take a look at the VWIGX. Sometimes, their server is down. You can't get the data. This is Vanguard International Gross. Let's take a look at it on the weekly chart so you can see what's going on. As you can see on the weekly chart, it has continued higher. And since it's an international fund, is the global markets and the international market was the domestic market going to continue higher, and the COVID-19, they find a cure for it and everything goes back online. This is why this fund is a little higher. Let's take a look at two other ones. TLT, that's the bond market. You can see that the bonds tried, to bounce back up a little bit more moderately on the weekly, but eventually fell back down this week. Do we keep interest rates lower so that the market can continue higher? And we can see it on the daily, fell down from the prior 2-week range, 3-week range to continue lower. If it does, that will help the Federal Reserve Board keep interest low to stimulate the economy and get us back online. We can look at the SCHX, Schwab Strategic Large Cap ETF. As you can see, it has recovered quite a bit of ground from the prior wedge last week, similar to the SPY or the SPX, to continue higher. And I'll put the SPY there to show you how it looks like on the daily. Similar situation, you can see that. And we can do one more out of one, and I'll do the tech sector RYT. That's the one I couldn't remember the ETF fund. So this is Invesco, exchange traded fund for the equity tech sector. You can see that the wedge we broke back up into it. Let's take a look at the ES a little bit more on the monkey bars. And what I go do here from the daily chart, what we can do is zoom in so you can see the range and the breakout of the cup. This is the handle or the shoulder. This is the head of it, and this is the other shoulder, and we eventually broke out. So what I want to do, go to style, go to standard, and go to the monkey bars. As you can see on the monkey bars, I put the hourly 20-day range. This was the prior week range. We eventually consolidated in the upper distribution of the 33.88, and eventually we broke up above the 92, the 4, and 34.22 from the Wednesday tweet that was on Trump saying, hey, he's not going to negotiate for the stimulus package and the checks to go out. He only wants to do a little bit less. We fell down, eventually recuperated, and we broke out. Do we continue or not? So what I'd like you to do, trade with the charts in front of you. Don't be biased to one side. I'm going to put one more slide up so you guys can be aware of it. And I want you to go over them yourself, do your homework. This is some of the stuff. Are we going to get a new high in the market? Does the overall trend market in the long term, such as the S&P, taking a look at the CCI on the weekly or the monthly chart, keep us up? So we're going to have the stimulus vote. We got election, a vaccine for the COVID-19, reopening of the global and domestic market and economy recovery. This is some of the ETFs that I went over of them, but I didn't go through all of them. Make sure you do that. And here I put something about the breadth of the New York Stock Exchange and this NASDAQ from 2003 till 2020. We had 3 events that kept us in this situation and made us continue higher because of the global economy and the Federal Reserve Board putting more money into circulation. The futures are the micro mini, the ESs, the NASDAQ, the Dows, the Russell, the gold, the oil, the BTCs, and so on. And some of the stocks that just went over. I didn't go through all of them. And trade the charts in front of you. Maximum flexibility, be fluid with the market. This is used for illustration use. We're not a broker dealer. Past performance doesn't indicate future results. Use at your own risk, and data may not be copied. So have a great week. Look forward to seeing you next week, and take care.